Investing is a crucial component of financial planning, ensuring financial security, achieving long-term goals, and wealth building. Let me share some key reasons why investment is so important. One of the primary benefits is wealth accumulation. Investing allows individuals to grow their wealth over time. By putting money into assets like stocks, bonds, real estate, or mutual funds, investors can earn returns that outpace inflation and significantly increase their net worth. Another critical advantage is inflation protection. Inflation erodes the purchasing power of money over time. Investments, particularly in assets like equities and real estate, often provide returns that exceed the rate of inflation, preserving and enhancing your purchasing power. Lastly, let's talk about passive income. Investments can generate passive income through dividends, interest, or rental income. This can provide a steady cash flow without the need for active involvement, supplementing other sources of income and contributing to financial freedom. Investing is essential for building a retirement fund. With longer life expectancies, individuals need to ensure they have sufficient resources to sustain themselves in retirement. Investment accounts like 401ks, IRAs, and other retirement plans are designed to grow funds over time to meet future needs. Investments can help achieve specific financial goals, such as buying a home, funding education, starting a business, or taking a dream vacation. By strategically investing, individuals can accumulate the necessary funds to meet these goals. Building wealth through investing provides a financial safety net for unexpected events or future needs. Diversification and risk management. Investing in a variety of asset classes can reduce risk. Diversification spreads investments across different sectors, industries, and geographic regions, which can mitigate the impact of poor performance in any single area. Capital appreciation. Investments, especially in growth stocks and real estate, have the potential for significant capital appreciation. This means that the value of the investment can increase substantially over time, providing substantial returns to the investor. Economic growth. By investing in businesses and startups, investors contribute to economic growth. This can lead to job creation, innovation, and overall economic development, benefiting society as a whole. Certain investment accounts and strategies offer tax benefits. For example, retirement accounts like 401(k)s and IRAs provide tax-deferred growth, while Roth IRAs offer tax-free withdrawals in retirement. Taking advantage of these can enhance overall investment returns. Investments can be an important part of estate planning, allowing individuals to pass wealth to future generations. Properly managed investments can provide financial security for heirs and beneficiaries. Investing requires learning about financial markets, economic principles, and different asset classes. This knowledge can enhance financial literacy and discipline, leading to better financial decision-making overall. What is the primary market? The primary market is the part of the capital market where new securities are issued for the first time. It's essentially the launchpad for companies and governments to raise fresh capital by selling new equity, which includes stocks or debt instruments like bonds to the general public. The types of offerings in the primary market include initial public offerings or IPOs, follow-on public offerings, rights offering shares, mutual funds, debentures, and bonds. Now, what is the secondary market? The market where securities purchased from the primary market can be repurchased and sold, and the listed securities already issued by institutional organizations and the government can be traded is known as the secondary market. Unlike the primary market, where new securities are launched, the secondary market deals with the buying and selling of existing stocks, bonds, initial public offerings, follow-on public offerings, rights offering shares, mutual funds, debentures, and other financial instruments. An initial public offering, or IPO, is the process by which a private company offers its shares to the public for the first time. An IPO allows a company to raise equity capital from public investors by making its shares available for purchase by the general public for the first time. It marks the transition from a private company to a public one. An initial public offering, or IPO, allows a company to raise equity capital from public investors. This capital can be used to fund growth initiatives, pay off debts, or invest in business operations. It also provides an opportunity for the company's founders and early investors to realize the full profit from their private investment, typically including a share premium. Moreover, it allows public investors to participate in the offering, which can lead to a diversified investor base and increased market exposure. The money raised from an IPO can help a company grow and expand more significantly than it could with private funds alone. Going public increases a company's transparency and credibility, which can help it obtain better terms when seeking borrowed funds. Additionally, an IPO can be seen as an exit strategy for the company's founders and early investors, allowing them to cash in on their investment. Issuing an IPO raises a company's public profile, making it more recognized, which can lead to increased trust from customers and potentially smoother mergers and acquisitions. Lastly, an IPO can provide stock options or other kinds of compensation to employees, aligning their interests with the company's success. The initial public offering, or IPO, of a company can be an exciting opportunity for investors. To participate, ensure your Know Your Customer or KYC documents such as your citizenship certificate or passport and proof of address are up to date with your chosen depository participant, or DP. You must have a Demat account, an electronic repository that holds your securities in digital form. It's mandatory to have this account with a licensed DP in Nepal to participate in IPOs. If you don't have one, you'll need to open an account with a DP, like a bank or brokerage firm. The eligible applicant can apply for a local IPO by submitting an application form to the issue manager, collection centers appointed by the issue manager, or the applicant's respective CSPA bank. As of now, IPOs issued for local cannot be applied through Meroshare. So, who is a depository participant, or DP? A depository participant is an agent of the depository who has received the registration certificate from the Security Board of Nepal and the membership license from CDSC. A Demat account, short for dematerialized account, is an electronic repository that holds your financial securities in digital form instead of physical form. Imagine it as a secure online vault where you store stocks, bonds, mutual funds, and other investable assets instead of physical certificates. Demat accounts are prevalent in The reasons for opening a Demat account are numerous. Firstly, to convert the physical securities into the electronic form. Secondly, to deposit and transfer the NEPSE listed securities in a dematerialized form. Thirdly, to credit the securities allotted through IPO and corporate actions, such as rights share issue, bonus issue, merger, etc., in a dematerialized form. Additionally, it allows you to receive the statement of the securities held in a Demat account, to pledge the securities held in a Demat account, and even to rematerialize the securities held in a Demat account. The key features of a Demat account include electronic holding, which means securities are held electronically, reducing the risk of loss, theft, and damage associated with physical certificates. Easy transfer. Transfer of securities can be done easily through electronic means, making the process quicker and more efficient. It also eliminates paperwork, reducing the paperwork involved in buying, selling, and transferring securities. Moreover, it reduces risks by minimizing risks like forgery, theft, and bad deliveries. Lastly, it saves costs related to stamp duty, handling charges, and other physical certificate-related expenses. Opening a Demat account. Investors need to open a Demat account with a depository participant, or DP, which is typically a bank or a brokerage firm. The DP acts as an intermediary between the investor and the central depository. Now, in India, there are two main depositories, the National Securities Depository Limited, or NSDL, and the Central Depository Services Limited, known as CDSL. A Demat account is usually linked to a trading account through which investors can buy and sell securities. When a trade is executed, the securities are credited or debited from the Demat account accordingly. Let's talk about the advantages of a Demat account. Firstly, it simplifies the management of securities and transactions, offering great convenience. Secondly, it facilitates faster transactions and settlements, enhancing efficiency. Thirdly, there are enhanced security measures that protect the holdings. Lastly, investors can access their holdings and transaction history online anytime, providing superb accessibility. Now let's walk through the steps to open a Demat account. First, choose a DP. Select a depository participant like a bank or brokerage that suits your needs. Next, fill out the application form provided by the DP. Then, submit necessary documents like identity proof, address proof, and your PAN card. The DP will verify the provided documents. Once verified, the Demat account will be activated and you will receive the account details. Remember, a Demat account is essential for modern-day investing, making the process of buying, selling, and holding securities more efficient and secure. So, what exactly is a CRN number? A CRN number is the identification number provided by ASBA member banks to confirm the verification of the customer's Demat account and bank account after receiving the application of CASBA registration. Now, let's talk about the BOID, or Beneficial Owner Identification Number. This is a unique 16-digit identification number given to a beneficial owner, which is generated only when the BO opens a Demat account in CDSC through an authorized DP. Also known as Demat numbers, the BOID is crucial for identifying your Demat account. What do we mean by Meroshare? Well, it is a software designed to provide a facility to the beneficiary to apply for the public issuance of securities. In addition to this, it allows investors to view their shares-related information, portfolio status, and facilitate the electronic transfer of shares. The probable reasons for IPO application rejection are insufficient balance in bank account, duplicate application received, if applicants are those who have owned any kind of shares of the company before the public issue, or if the bank account is frozen for debit. To renew your Demat account and Meroshare from Meroshare itself, simply first go to your own profile section and click on the Renew Account option. Then complete your transaction by choosing one payment partner among the provided options. Which securities broker should one choose for buying or selling shares? Well, shares can be bought or sold through any securities broker, licensed by the Securities Board of Nepal, also known as CBON. In Nepal, 50 licensed brokerage firms are operating so far. So what exactly is stock cornering? Stock cornering means obtaining sufficient control of a specific stock in an attempt to manipulate the share market price. The market prices of stock are determined by the interaction between the demand and supply of the security. That is, the interaction between the investors who want to buy the securities and those who want to sell them. The market price of securities is mainly affected by the fundamental aspects, dividend history, and growth of the company. Simply put, the market price of the stock increases when demand increases and vice versa. The index, which is calculated on the basis of the base year value and current market value of both the promoter and ordinary shares listed in NEPSE, is called the NEPSE Index. It is the most important index to measure the stock market and is also considered as a barometer of the economy. NEPSE is the principal stock exchange of Nepal. It tracks and provides various indices that reflect the performance of the listed companies and the overall market sentiment. Let's explore the key NEPSE indices. First up, the NEPSE Index, or Nepal Stock Exchange Index, which is the main stock market index that measures the overall performance of the Nepalese stock market. It includes all listed stocks on the Nepal Stock Exchange, providing a comprehensive view of the market's health. Next, the Sensitive Index, an index calculated based on the base year value and current market value of the total shares of the companies listed in A category in NEPSE, which are considered blue-chip stocks. The sensitive index calculation started from January 1, 2007, offering a gauge of the most reliable and stable companies in the market. Moving on to the float index, which measures the performance of the companies based on the freely tradable shares, excluding promoter shares, thus providing a more accurate reflection of the investable portion of the market. Lastly, the sensitive float index, similar to the sensitive index, but includes only the float-adjusted market capitalization of A-class companies, reflecting the performance of the most significant and investable companies in Nepal. Now let's delve into the NEPSE Sub-Indices. Starting with the banking sub-index, this sub-index tracks the performance of commercial banks listed on the NEPSE, reflecting the health and performance of the banking sector, a significant part of the Nepalese economy. The Development Bank Sub-Index measures the performance of development banks, which play a crucial role in supporting various development projects and industries. The Finance Sub-Index reflects the performance of finance companies, vital for providing credit facilities and financial services. The Hydropower Sub-Index captures the performance of hydropower companies listed on the NEPSE, significant for tracking the development and financial performance of hydropower projects given Nepal's rich hydro resources. The Insurance Sub-Index tracks the performance of insurance companies, a growing sector in Nepal, helping in analyzing its market trends. The Manufacturing and Processing Sub-Index measures the performance of companies in the manufacturing and processing industries, essential for understanding the industrial sector's contribution to the economy. The Microfinance Sub-Index focuses on the performance of microfinance institutions, critical for financial inclusion, especially in rural areas. The Trading Sub-Index reflects the performance of trading companies, providing insights into the commerce and trading activities in the market. The Hotels and Tourism Sub-Index tracks the performance of companies in the hotel and tourism sector, significant for gauging the market performance of this crucial industry in Nepal. The Others Sub-Index includes companies that do not fall into the above categories, providing a comprehensive view of miscellaneous sectors. The Mutual Fund Sub-Index tracks the performance of mutual fund schemes listed on the exchange, offering valuable insights into the collective performance of mutual funds, which are investment vehicles pooling money from numerous investors to purchase securities. Lastly, the Finance Sub-Index and the Investment Sub-Index, the former tracking the performance of companies belonging to the financial services sector listed on the exchange, encompassing various institutions that deal with financial products and services, and the latter providing insights into the investment activities in the market. Understanding the importance of NEPSE indices is crucial. These indices serve as indicators of market performance, helping investors gauge the overall direction of the market. They are also used by investors and fund managers to make informed investment decisions. Additionally, they provide a benchmark for evaluating the performance of individual stocks and mutual funds. Lastly, these indices reflect the economic condition and investor sentiment in Nepal, making them an essential tool for both local and international investors. What is price-sensitive information? Well, it refers to the information of the company regarding distribution of cash dividends, bonus shares and rights shares, changes in management, growth strategy, financial status, various agreements, and other information which are sensitive to the prices of the stocks. Such information has a direct impact on the price of securities, making it crucial for investors to monitor. What is Debit Instruction Slip, or DIS? A DIS is the instruction slip given by a beneficial owner, who has a Demat account with CDSC, to debit the stocks from their account. Nowadays, electronic share transfer via Meroshare is being prioritized, simplifying the process significantly. What is right share? Well, a right share is a share which the company provides a right to buy directly from the company for existing shareholders in the proportion of their existing holding within a fixed period of time. What do you mean by online-based shares trading? Online-based shares trading is the process where investors buy and sell shares with the help of a securities broker through an online medium using their own username and password. What is T+2? T+2 signifies the time period for the settlement of transactions traded in NEPSE. It denotes that settlement should be done within 2 working days of the transaction. What is book closure? Book closure is a time period during which a company will not handle adjustments to the shareholder register or requests to transfer shares. The shares can be traded even during the book closure, but the investor who buys the respective company's shares during this period will not get the dividends declared by the company before the book closure date.